Good morning, my friends, and welcome to the Breakfast Club. It's 7:01 here in Canada in the morning, and it's the 23rd of April. Here we are. It's going to be promising to be a very interesting week. A little ups and downs. I've been looking forward to this week for a long time. Make sure we're all live here, up and running. There we are. Let me just turn this stuff off here. All right. Here we go. Let's go through these charts this morning. Just got back from New York last night. Great time in New York. A very interesting place, I might add. It's a nice place to visit. I get up this morning, went for a little walk around the pond. It was so quiet. I could see the sun. I could see the clouds. I could see the sky. And all I could hear was birds chirping away, ducks on a pond. I didn't hear that constant alarms and beeping and just the hustle and bustle that is a sleepless New York. Crazy, crazy. The contrast this morning is just everything's so quiet. All right, let's get busy here. That's what I want there. Okay. Okay, let's start with let's start over here. So whilst we were in New York, we got this little return back to the blue line I was looking for yesterday, hit it nicely. We had a bit of a reaction off of it, drove down to this candle's mean threshold, and we're back up again, reaching for this old low here and take out yesterday's high. We haven't quite taken out yesterday's high. The mean threshold of this candle seems to be holding price at the moment. How long that lasts, I don't know. Probably not much longer. We might see this get taken out and the 10 o'clock take out these highs here. If this creates a relative equal highs and it starts to come back into the range a bit, then finally comes out at 10 o'clock and takes out that high, then I expect to see more downside prices. I still haven't seen anything that confirms anything upside yet. So I'm still bearish overall, just because we've had two upside days. Although that breaker definitely is providing us a level of support. So we'll see how that one responds today. We're still looking for any turns above an old high. We get this. This was a really nice reversal this morning. I didn't catch it. I should have looked at this before I actually went for a little walk, because this would have been a nice catch. So you see this reversal here. We've taken out some significant lows over here. This is your reversal. Keep your eyes peeled on these kind of things. These are bread and butter setups. They really are. So see how our body breaks above it, but we don't get a chance to get back in it. So where's the next thing you look for? You look for the breaker right here. And right there, see how it broke above it? It came back down, tagged it perfectly, zero drawdown, and you've had to run back up to this breaker up here. Actually, it's a more mitigation because this low did not take out anything here. to the mitigation block. Yes, indeed. I'm still anticipating these highs get taken out. I'll run back into cleaning up the midpoint between these two candles here, which would be the fair value gap fill on the upside. But other than that, we're still waiting for a reversal, which would technically be this one right here. We've taken out this high and this high. We've got a reversal right there. That close to an old high. We haven't even hit the rejection block yet, so I'm going to hold off on this one. But if it does gives you a return, look for a return back inside the small range right here. There's a discount array below you here. If it trades above that on a close in the next 20 seconds or so, look for the mean threshold of this candle as your wiggle room. And if that gives way, then we have further upside. I don't have a big displacement candle through this, so I'm holding off on that one. Again, mean threshold of this candle hasn't quite been hit yet, but we have dug into the order block below us here on the daily. We're coming back up inside this daily inversion that we have now. So if we kick off of this one more time and start to come back down, I'd like to see a reaction off of this. If not, then we're going to start driving through these candles. They're starting to get into a bullish reversal here. I haven't seen anything other than nothing that really warrants it to go bullish. I want to see us get above this fair value gap here on the upside before I go really bullish on S&P 500. Another classic example right here. Return to it here, wicked way above it. This one's only a wick though, you notice that? How it's just a wick that got above it, opened above it, and then just traded into it really quickly and then continued to leave. So we're looking for this high to get taken out some more. Yeah, or Mr. Dow here. So your reversal right here. This candle here. Make sure you see this. This candle's body closes above, and then it literally opens up at the next candle into the trade to go higher. And now we're just kind of waiting for some sort of reversal. It's a wait and see game here. See how the bodies have not broken this swing point here on the hourly. And we're still inside this. And we have bodies are now breaking this upside. You have this one here, but it's not a swing. So you're really between this swing here and this one here. And we're just breaking bodies above it now. So chances are we're going higher. We're consolidating inside the American dollar here right now. I'd like to see him give one more push up into that gap above us. At 106.680 or 638. If we do push up one more time, again, this is kind of side to side, so I've got no real on the daily, no daily bias here. we're sitting in the middle of this whole consolidation, so you have to be super sniping on these. And you've come to the top of the fair value gap here, and we're starting to retrace back into here. So you're pretty much inside this fair value gap right now daily. So you could continue pushing higher to this order block on the daily right here in British pound. Yeah, at best I can see upside to this British pound here. We've already hit the low and reacted off of that. So if we continue going lower, then you're looking for fill of the fair value gap below you, taking out yesterday's low. If that American dollar reaches for that gap above it, you can look for this fair value gap to fill. Yeah, see how we're banging around between these two inversions now? Oh no, this is just a fair value gap here. Inversion, fair value gap. They just bang it. They're stuck in the middle of those two. That one's not completely filled yet, and this one hasn't been traded through all the way either. So you're between this one and this one. Ooh. What do we got there? Canadian dollar. Right at the peak times of being in the States, in New York, really expensive place to go. And we had the maximum amount of money it would cost you to go to New York, right at the peak of our conversion of funds. Now that we're back there, so like, all right, now we can, they're gone, the Canadians are gone, now we can go back there and start lowering our prices again. Like, wow. Not the worst it's been, but the exchange rate is 141 for us. So they add another 3 cents to the end of that. I just looked at my Visa this morning and it was 141 conversion. It's robbery. Robbery. So yeah, we're looking for more downside on Canadian dollar. I'd like to see this come back into this range a bit more. We've got a little premium array starting up here. If this stays open today, see a return to this and a continuation on the downside. If you get above it, then we're obviously looking for more upside. See if this stays open, or if we just get a return to these old highs here. I like to see that come back all the way into here and fill this. But we've got nothing that really warrants a delicious little return. We have a swing point here, obviously. That's a swing set up there. Body trades below, trades back into it. Continuation for lows. The swing points are lows over here. We have no bodies breaking these to the upside, so we're continuation on the downside. So we'll look for further downside prices in Canadian dollar, New Zealand dollars, sideways, Australian dollar. It's pretty much sideways. We have this little space to refill here, back to this order block. Now a breaker. It's our last down close candle before breaking this little high here. So look for a return back into this level, 66.32. Japanese yen still piling up. Finally had this little breakaway here. That's a continuation on the upside. We have nothing here. We'll see what happens with that American dollar if it takes out that gap just above us. Then look for a reversal on the hourly or 4-hour charts to catch our run back down. Back into this fair value gap below you on the daily. So kind of a hard one. Wait and see on this Japanese yen. Crude oil. A little gap right here. You see this? Body trades above it. We come back all the way back inside it right here. Also a fill of the fair value gap. You see how it just kind of ran down a little bit more into the imbalance right here, just to fill the imbalance one more time. And the breakaway. If you miss the imbalance, look for it. Candle that takes out that low. It's over here though. Trade above it, come back into it here. Not crisp and clean this morning. Cleaned out these old highs. Back to the order block. Okay. So look for this fair value gap to fill here now. If this turns into a look for this reversal that's happening here. Return back into oil. Stop loss here. Ideal entry is right here. Trades above, comes back to it on a close. Get out, probably going higher. If this continues to drive through and you don't get an opportunity to get on, I'll put one in there. Just because these look really good. And then we'll look for gold. What's gold up to? Nice significant drop there yesterday. So that one's been moved. That one's been edited. Good. We're in oil. If oil gets, or gold gets through this mean threshold, this candle is already eaten through with a quick wick. If this leaves it open today, return back into it tomorrow for continuation on the downside, looking for a deeper discount array, 50% of that range. Same thing here, you're looking for 26 bucks right now, 26.40. Copper just returning back into this order block here. Look for 40.38. What's the low already? 40.37. 438.6. 438.6. So if you get a nice reaction off of this now, you want to see this on the daily close above this candle's high, or low, I should say, right here. See, we've got a swing of happening. So keep this in mind when you're looking at copper. Has got this little run right here. So if they get a return back into this, look for a short from here, back into the mean threshold of this candle, old high. All right, we're getting more of those loaded on. And then, I don't know why we keep playing with palladium. That's still stuck in its little, we do have a, no, old highs taken out. Don't know what's going on with palladium either. Thanks, we're up that. Let's go over here. All right, we're back with NASDAQ. And how's everybody this morning? Here. Victor, good morning. Abs, good morning, my friend. How are you? I hope you're all well. It's good to see you guys again. Tommy, good morning. Good morning. Don't let that trade shake you off there, Tommy. You got us, man. Just stay focused. Wait for your setups. Patience is one of the best things to start out to learn real quick, knowing when and when not to trade. And today, I don't see anything overly delicious to jump in on yet, so we'll just wait. Fernando, good morning. And Harry, good morning. Paul, hello. Johnny, good morning. Greetings from Kenya. Good morning. Good morning. Carbor, morning. And Tristan, good morning, folks. We've actually lost some people, lost some subscribers going to New York. Didn't gain anybody. We had 3 people. We've lost 3 people. That's okay. Some people come, some people go. We still have Lori. That's good. As long as I got my original people, I'm happy with what we've got. If we don't get any more, that's okay. 600 people is a lot of people. We can help a lot of people with 600 people. If everybody pays that forward, you imagine 600 people, that will go exponential pretty quick, man. We're just waiting on some action here. So where we got another 4 more minutes, and then we have the open. What are you guys calling for open? Up, down? Continuation on the sideways? Where are we going? I still believe we're going up. Take out yesterday's high. No Kirk. You know what? I've got this terrible feeling that something's happened to Kirk because he was so keen, so happy to be here. He was just like the first one through the door in the morning. I sent him a note on Telegram, and like he was so happy to be here and be part of this whole journey. And then suddenly, boom, stopped. Nothing. Not a word, not a twitch, nothing. He hasn't even looked because you notice when you look when someone sends you a DM message, and even if you look at it, you get a double check mark on there that says at least somebody's looked at it. He hasn't even looked at the message. So I've got this terrible feeling that something's happened. I really hope there's nothing happened because it was such a keen person. What a positive energy that he brought every morning. It was so exciting. So I hope he's not. And I haven't heard anything from Terry either. Terry's been gone for a while. I know he was having some problems with uh, his wife having cancer. So I'm really hoping everything's okay there, and he's just decided to take some time to himself and be with his family. So it's simple people like that that I miss them, and they do make an impact. I do notice them. I'd be like you, Abs, not turning up, disappearing on me. As a lot of you guys are starting to connecting with a lot more of you folks as well. Hans, Tristan, Tommy, my buddy Tommy. Um, Hans, we're glad you're back. Thank you, sir. Thank you. Hoping the PMI sets up a good silver bullet. Yeah, I don't need something. This is pretty choppy. Even Bitcoin's not giving us I was looking to try and get in on this one this morning. I saw this here. I thought, oh, I could get in on that. And then by the time I was looking at it, was back here, and then I thought, well, if we take this candle out here and come back to it, I could get in on it. And then I just saw it still climbing. I was like, nah, that's way past the equilibrium point of that. Even if it came back to it, there's not a lot of juice left in that. So I'm going to wait. And now you've got this one here. These highs have been taken. There's the open. The highs have been taken. We've traveled below the lows. Then all of a sudden we get this upside of the reversal that's happened here. It's taken out. It's come all the way back down. Then it's taken out the bottom half again. Then it's come back up inside it with perfection. And now it's clearing out the top again. So lots of opportunities to go, oh, I'm on the wrong side of this. And I want to go short, or I want to go short on this. And then it comes back up, takes your high one in and pops you back out. Then you go, ooh, I'm wrong. That's going up again. So your fail safe saves you. And then it goes higher, drops down below you again. You go, oh, okay, maybe it is going lower. Comes back, gives you an opportunity to get in. And then all of a sudden it pops up, hits the top. You would have had all three of your entries in there. Stop loss is sitting right here. And that's where you decide right here what you're going to do. Would you be out on the run back up to squeeze your stop loss? Or would you have kept it in long enough to clear out one or two of them before finally taking a loss on the third? This is really interesting to see how people would manage their stop losses when you see it going up and it's saying to you, hey, look, I'm going up now. I've broken that little high. I'm going up. I'm giving you one opportunity to unload your position because I'm going higher. I'm going lower, going higher, going lower. You got to, and if it keeps bouncing around inside these things, you got to say, I got to stay out of that until it gives me something cleaner. So it did go higher. This is good. This is what we want to see. Get some activity in here. Inject some volatility into this baby. Oh, I'm so sorry to hear that, Abs. So deaths in the family, so they're so impactful, man. They just send a huge ripple through the whole family. So sorry to hear that. My condolences to you and your family. I hope whoever passed has given you many, many memories, lots of laughs, lots of things to remember them by. Initially, it's the pain of the loss, but you count on those things, those memories. They certainly are gifts. They're painful at first, but they're wonderful gifts that you create with people. So I got to be in the moment, enjoy your moments with your people, love them intensely. It's those moments you'll count on when they're gone. You took out the high from yesterday. We have a swing happening. We have a breaker right here. Eight seconds. I gotta do one. That's why we're in this. That's why I put them on. You see his setup. Nice. Let's take that there. Oh, we'll see. I chicken out too soon. A kickoff there that I was expecting. Gonna wait on this one. That fair value gap above us looks like it's going to be a one more run. I like this initially, and then this run back up again. Thought, okay, maybe you're just trying to take out the high. Now this another run up. We are getting some resistance here. Let's wait and see what we get. Yeah, you want to see there's something that comes up where you pop up, you come back to it, you tap it, and you go, you leave. You don't just sit here and put 4 candles in here. That's why I'm suspicious that this might have more upside. But you have to get through this candle to confirm the upside. Otherwise, we're bearish right now. We'll see how this sits out. Thanks, you don't be able to get you. Yep. Totally respect that, man. Totally respect that. News at 9:45. Yeah, that could really drive that up. This is why you're suspicious of when you see these little wicks and that going in here. We don't see that clean reaction that you typically see off of these inversions. So you'll see there's one right here. So a body trades below it, you come back up to it, and then you leave. Like 2 candles later, you're out of here, right? That's what you want to see, some intent to get out of there. Like it's intent to go up there. When you see this little waffling going on here, don't like that. I don't like that at all. So just, you can look at multiple examples of that. Body trades below through 1, 2, trades below the second one, comes back up into it, taps it right here, continuation for your exit. And they leave right away. That's what you were looking for. So I think this is going to go give it a good jam going up one more time. And then we'll have to wait till 10 o'clock before that silver bullet gives us a potential setup. I like this fair value gap fill. And I do like the mean threshold, upside mean threshold, maximum mean threshold. This one, yeah, it's going to fill that if it has to. But inside this area here, I'm looking for a setup for a reversal. For one more drive down in April this week. One more drive down this week. See, that would have taken in that trade right there. And so now we're going to wait and see if my suspicion was correct. I'm just going to grab a coffee here. I'll be right back. Got 4 more minutes for the news. Paul, I'm waiting till the news. It's consolidating. Yes, 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 I agree. So we did get a nice pump up. Nice. They hit that area I was looking for, the body. We did fill. We got the fill and the fair value gap. Okay. So I want to see a reaction off this now. I want to see this. Give us a silver bullet. Unless this runs up one more time into that higher high. For 10 o'clock. Looking for that 10 o'clock. Good morning, Invest. Hope everything's well with you. Get the rejection block of the 1 hour. Look at that, right off of that. We have not traded below this yet. I'm waiting. Wait for time and price now, my friends. Wait for time and price. Looking for, what am I looking for? Thank you for helping me. What I can is because I work. Oh yeah, thanks. We got news at 10 o'clock. New home sales, Richmond Manufacturing Index. Those are all mid-level. Get this fair value gap above you here. Tommy, we're happy to help, man. Whenever you're in here, whenever you got time, keep posting your pictures. Keep posting your screenshots of your analysis of the market, why you think it's going here, where you think it's going, where it could fail, where you could put your stop. Even if you're just writing them out on paper, you get an opportunity to see something, even if it's back in the charts using some hindsight. Don't let anybody ever tell you that hindsight's not valuable, because it is. You can get your hindsight look to confirm, so you start training your eye to look for that specific setup. And it looks like our oil got taken out on those trades. They all loaded in. I didn't watch them, you see. See how that body traded above that one right there? Let me show you where that went wrong. I didn't watch the trades. So this is okay. This is where you get to see where your trade could have gone or was going to go wrong. So we loaded on 1, 2, 3. So we loaded on all inside here. Then we had a body finally trade above it. Stop loss was sitting right here. Traded above it. And then you go, oops, this is not looking good. We're going higher. There's your indication we're going higher. It came all the way back down and gave you an opportunity to take out all of those trades at break even. Then it said, Darren, where are you? I give you an opportunity. Darren, look, I'll even give you a little bit of profit if you just come back and take me out. Oh, well, I guess I'm leaving without you. And then it comes up here and it takes everything out right there. The algorithm was hanging around as long as it could to come back, stop talking, come back and check your trade, because it's not good. So you have multiple opportunities to get out before the stop was finally taken over here. It's a good little learner, that. That's why when you, so you look at that, Tommy, and you go, I'm looking for where this thing would fail. What's up? Is it leaking? Sorry, we had our sink, we had our plumbing and all that put in. So they said when you come back, put your, turn it on and look for leaks. I'm not sure if a plumber is really that confident when he says turn it on and wait for a few hours and look for leaks. So that's my fear. That, and she said, and then I drained the water filter and then you can just hear it running and dripping in, but there's nothing actually leaking out. It's all running inside. So I think it's resetting itself. We'll see. Anyway, what was I saying? Oh yeah, so Tommy, when you're looking at these and you're looking for that potential for this to fail, you kind of just put your diagram up on, do a screen capture and say, like, I'd enter here, here, or here. And if we had a body trade above this, it fails. My stop loss will go here. My fail safe is here. And if I get a return back inside, I'll just unwind my positions as it comes back down. So this one right here would have given you a 1, 2. Most of your positions would have unwound. You could have unwound the last one there if you stayed in that long enough. But right here, those two candles, or at least that candle right there, once that one closed and opened up here, that's the decision you make right there. Do you weather this going back up to take your stop loss out right now, or do you hope that it comes back in one more time to touch this to get yourself out? Neutral, small loss, and a In this case, you would have been the smallest. But that's what you're going to kind of do. Practice with that, just a one particular setup. David did that. Dave Barry did that over and over and over again and got really, really efficient at recognizing these swing points and where they will fail. So that's my advice to you, Tommy. Yeah, we see we took out that high one more time. Now we've got a little inversion going on here. So now do we trade above this? Right into the mean threshold of that wick right there. See that? We don't want to see it trade above that. We have another swing point here. Multiple attempts, like we saw here, multiple attempts. Now I want to see this. For me to be happy with this as a turn point, I want to see this breaker here get taken, trade back to it, and get short, just because we've had an opportunity here. There's an opportunity here. If you're bold as brass and you think you're going to take that, your news release at 10 o'clock. We've only been out for 1 minute, so give it a chance to stretch its legs, the news to get out there and sully the world. And we'll see what happens for I get 3 drives up. $17,553. Yeah. We'll see how that 50% of that wick does there, abs. Right now I'm bearish. We've taken this high. We're at 50% of this wick. This is one of those rejection blocks that if you're aiming for a high, you may not get it. You're definitely inside the rejection block. You have a reversal that's happened. So right now I'm bearish until we get a body above that. I'm bearish right now. And if you're bearish, you're inside here. You're trying to nibble some profits. Look at your 50% of your range here and nibble off some. So if you're doing quick sniping out of that and you want to take that trade for a sniper, if you're in here and you're short, take your 50%, pay yourself there, move to 50, and you're just waiting right now. And you're in full profit still. You won't take any loss on that. If you would have bought that short, get to 50% of the range, pay yourself there, now you'd be out. So you got a small profit. Whether or not you want to trade inside that little range, it's entirely up to you, but that's how you could use the 50% of the fib, or back to the breaker if you're trading to the breaker and then get to the mean threshold of that breaker, which is right there. Now I want to see whether or not this keeps rolling over here. These are medium impact news events going on right now. we don't have a swing below a low. So for this one to be the reversal from that one to that one, we did not take out an old swing point. So I'm more bearish than I am bullish. Even though this was the body trades above here, trades back into it to go long, take out the highs, take your profits here. If you're using just inversions and fair value gaps that become inversions, remember, they become a senior, for me, it becomes a senior array. When they become an inversion, they're a lot stronger than fair value gaps. And this is just reclaiming the fair value gap here. But this inversion right there, popped in, go long, aim for your rejection block and higher. You get the reversal, go short, aiming inside here for 50, 62, 70%. Now you're back inside that range. You either reload on again for another short. That's the buffer. That's how to buffer your trade now. So all the profits you've made inside here, you're using them to offset in case that high gets taken out one more time, and they do go for that high there. But then you wait to see if there's a body. So if you're buffering in right there, now we wait for this. If a body closes above it, you might say, that's my mean threshold, is my line in the sand there. That's your wiggle room. Or you might just say, as soon as that closes at 17 seconds above this candle, my guess is we're going higher. So just watch here right now. So imagine playing with your fail-safe right now. See, you've already ran through this. You've got 3 seconds left. Your stop loss would imaginarily be there. See, you're higher. Now you can be closing that out now, or you say, well, we might give this one more attempt now to come back and tap this and give myself a chance to get out of my trade at break even. So watch right here. If it comes back and taps that, you get out right there. That's break even. That gave you your opportunity to get out. Now it's going higher. So that's how you kind of just study the price action as it's happening. And you don't even have to put a trade in. Just practice your price action. Ooh, like that. So now you're expecting it to take that high. So now I'm bullish. I'm with you, Abs. Just because of that one little turn right there. And I wanted to see the overall, this breaker get taken on the downside, but because I wouldn't want to get suckered into this again. It's like a 3 drive pattern. Drive up 3 times, and we'll see if that third drive takes that out. What do we got over here? So on the daily, we have that. I think we're getting near that mean threshold, are we not? Mean threshold is around it's about 582. 582. Hey, Abs, how's Oracle doing? He's in med school, is he not? We're going to go to med school. How's he doing? Did you tell him Darren says hi? I hope he's doing well. Took profits early instead of letting it run. If you took profits early and didn't let it run, ask yourself, Why was it? And document it, put it in your journal. Is it something that was it out of fear that you did that? Was it something your mind was looking at saying, hey, look, I think for sure we've got so there's your high. We have a potential silver bullet here if we get below this at 10 o'clock. Are we going to take that high? That's 3 pops up. This looks like it's going to be a potential reversal happening. Time and price now, folks. We're looking for that silver bullet. I still think that's going to go up 51.20. I think it wants to revisit this piece in here, Abs. We're already over this. Yeah, all I can think about is you're right at 50.96. Take that, and then heading for this fair value gap mean threshold or consequent encroachment of that inversion there. Just popping up inside that rollover and come back down. That would imply that we've still got more upside. See how the bodies are still respecting that right now? I'm looking at this little inversion here. Instead of trying to catch the, this is really choppy. Instead of trying to capture the perfect return, I'm going to wait for something more cleaner. Patience, 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 patience. He's doing good. He got all happy when I told him we were talking about him. He watches your videos. Oh, that's great. If he's watching Oracle, you keep going, buddy. You keep going. Get in that medicine. Medicine's a good place to be. There's a really interesting book I just finished reading called Lifespan by David Sinclair, all about expanding the age. Like, he considers age a disease. It's really fascinating, the stuff they're doing with genetics right now in human trials. I just picked up the stuff called NMH, or NM, nicotinamide mononucleotide is what it's called. It helps the body to repair DNA. And yeah, I just picked it up. I just got some this morning, so I'm going to give some of that to my dad, because he's Sinclair got some really great results with his dad with metformin and this NH or ND and NMN is what it's called. So anyway, I got some for my dad. So stick with that, Oracle. You're in a fascinating career right now. Medicine is going to be crazy changes going to happen to medicine with AI as well. And I see some great things happening with that in the next 20 years. And he's at an age now where he's just getting into this. So he's going to see some incredible stuff. Before we die, we're going to see people tackling this whole age or aging process, and you're going to see some huge changes in how people look at medicine. I'm excited, actually. I think it's going to be great. We're going to be old enough to be able to see some really dramatic changes happening in technologies around it, medicine and DNA. This make fair value gap, I think I'm taking it, invest. Yeah, there's nothing in here for me to take now. I'm just gonna wait for something. You want to see a big displacement candle now. These are just one of those painful, slow meanderings up to take this high out here. If it takes this high out, then we get a nice significant displacement candle, like it's got intentions of getting back into this range, then I'd be excited about that. But I'm going to wait till I see a significant displacement candle. I'd like to see this big push up like this and a big displacement candle down. Like, I would like to have seen a body get right below that, come back up into it. That would have been a delicious little return. But we've got, the body did not close below here. We did not get below. Yeah, we do not get below this breaker. So you wait till you get something that's going to show you a decent return. Yes, displacement for sure. We're slacking off, D. Where's Lori? No carrot. I'm sorry. I'm just a little verklempt this morning. I have here's my carrot. There's the go. We're gonna get the carrot up to at least here, yeah. Give us some motivation. Lori, I haven't seen Lori. Laurie's doing his own thing now. I think he's got himself a funded account, and this might be too much noise for him, which is fine, which is fair. People are gonna break off. They're gonna learn stuff, and then they're gonna break off and do their own thing. I totally think it's cool. That's great. It just means that they're comfortable with their trading now, and they're like the little fledgling duck. They get to leave the nest and off they go. But I think Laurie already had a pretty good understanding of the markets anyway, so I wish him all the best. If he's out there plugging away at it, then I wish him all the best. If he pops in, it's a bonus, man. I enjoy having him around. What was my daily upper wick limit there? Ah, yes, the mean threshold of this thing. This should be down here. Somewhere in there. We could get denied again. We could just come right up to the edge of that thing and it roll over and just get denied. And if you do catch these reversals, don't forget the range that you're in. Don't think you're going to get the big snap back through the whole thing. Look for the range that you're in and start paying yourself on the way down till you get a significant displacement candle that comes back up, and you want to manage this from the back end. It fails on you here. You go, oh, okay, I got to the mean threshold, but I didn't get my full fill of my fair value gap. Turn against me, this fails. Well, pull the fib tool, use the fib tool for your advantage, and see what you get. So you've got this small range right here, so it's not even worth trading that until you get a significant displacement. Hopefully below this candle, come back up inside it here for this breaker. Maybe a swing up into here, but you think about if you put your order in here, your stop loss is there, how quickly it can come back and take you out. Mean thresholds, your line in the sand. So watch right here. We're getting into 24, 21. Yep, that's a reversal right there. We'll keep our eyes on this. You want to see, I want intent to get down here now, get through this breaker. I think the breaker is the one that's going to convince me whether or not we've got, if we get the breaker taken out on the downside, to me that would be the displacement that we're finally going to break this little trend line phantom going on here. Eat it, the carrot. So it's just waffling here. It's not giving you any intent to go anywhere other than just slow, methodical run up here. See how that's displaced down? So if you're trading inside this range here, and that one literally went traded below, you popped up into it here, came back down, you're inside this order block right here, you traded down into the mean threshold of the breaker. That's it. That's your range. It's a little tiny range. There to there. Not worth it. Order block, order block. You came down to 1. Now you're coming back up to this one. See how we traded through the high of it? Now we're going higher. Carrot. We'll give you some delicious carrot. That's where it tipped its hat, right there. So hey, guess what? I'm going higher. Right there. Tippy tappy on the carrot. That's 55, almost 55. So we're pretty much break even with that guy. What's the high on that candle? 53.25. And we just broke the 53.25, did we not? The high is 54, 55. Okay, there you go. It's having a good munch on that carrot now. So the midpoint will put us right in the middle of this. Will put us right in the mean threshold. Consequent encroachment of the SIBI, also the mean threshold of the breaker on the daily. So we can entice it to go a little higher. Only has to run out that high like it's just done. Just pop into this fair value gap here, roll over and come back down. And you see how we've got this swing here on the daily? And there's your fair value gap swing for the opposite side. Now that we've broken this, we need this to close below that level and just wick up there. If we have a body that breaks down below this again, then we got further downside. If not, if we close above this, trade back into this for, and now the reversal has begun for the April low, in my opinion. Because that third week of April was the seasonal tendency for the swing low, and we've got our seasonal tendency, and now we're factoring in our swing for the reversal for the rest of the month back up into May. So this could be right here. Tomorrow could be the reversal back in here to get your opportunity to load up your charts to go along. That would be the classic setup we're looking for all these charts. This is your reversal to go short. You came back up inside it. This would be the reversal to go long. Trade back up, and you trade from this one to this one. You'll have quite a few days into May, the first week of May, or return back into this order block here. So I do like further upside if we close above here today. See you all tomorrow shooting the 553 on the Q and 595 on the ES. See you all tomorrow. See you, Abs, man. Take it easy, buddy. Derek, Big D, good to see you this morning. Saw your last TG post you and thought you wouldn't make it up this morning. I made it. I was awake at 5, quarter to 6 this morning. Lobo, what's it going? All right, so that's the mean threshold. That's the mean threshold of this breaker. That's the line in the sand for a short. You can allow a wick to get up in here. I guess you could allow for the whole candle to get taken. But the more you start to eat into this thing and the more you trade through it on 3 different arrays in one candle, your ass is next. So upside. This is exciting. Tomorrow. Okay, so there we've got a nice little snappy wick off of our objective. Now I want to see this turn into a little doji. For those people who are into dojis, there you go. There's the doji. Now you want to see this start to trade through here. I'm going to go short that. This is more of a gamble. Don't take the same trade I'm taking. I'm going to put that just above that. No, I'm going to put it right there. If I'm wrong, I'll do a smaller hit. I hope I got the right mean threshold there. And I was wrong. That was more of a gamble. That wasn't an ICT moment there for sure. Don't pick the highs. You're going to get hit. Wait for your swing to happen. That was a total gambler's 2 dice throwing at it. Snake eyes. That was a 2 ones for sure. Do you have any opinion on trading ES versus NQ? Seems like NQ has a wider range but is more wicky. ES appears to be calmer and a little more consistent with sticking to anticipated movement. I guess it all depends. When you look at this, Chris, you see how we got this swing here? The body doesn't really break the high here, but then when you go back into NQ, see how the body breaks this high cleanly, and then you come back and you tap it cleanly here, even though it's wicky, it just seems to execute more precisely when it does make its turns versus ES. I suppose it could. Let's look at this turn here at 7:45. See how there's a distinction between, there's a gap right here, a distinction where the body trades below it. You come back up to a precision entry. Now let's go over to ES. There is no gap. Body trades below it. It does trade up inside it, but that doesn't give you that indication that there's a swing point there. See that? That's the thing I notice about ES, is it doesn't give you as cleanly as the reversals don't give it to me as cleanly as they do in NQ, despite the fact, you're absolutely right, despite the fact that NQ is far more wicky than ES. See, they've got a nice little gap there. You want to see that pop below that now? So keep your eyes on that little piece right there. good body candle getting below that, come back up, find some support at it before you run here. You don't want it to run all the way down, take the breaker out first, and then get into the breaker. You want to see, there you go, that kind of thing. Respond, you'd allow it to fill that. Now you watch to see if it reacts off that candle. You want that to continue coming down now. That's a nice entry there. Stop loss would go here. Now for me, I'll be moving that right into break even just because of the instability of where we're at right now. So if it runs back up and taps it again, oh well. Now if it breaks through this one, I'll move my stop loss to above that one, because you don't want to see that break through there again. You want to see this. So now your stop loss, that's up here, your fail safe, would be moved to right there. If you break this low. Right now it's still sitting here. This could be the crazy Ivan. Return, have a look down, see where you are, then turn around and start shooting back up. Bottom of the hour. You see these turns occur at the bottom of the hour. So you want to see this pop through here now. And now I would be bringing my stop loss into profit. And this would be a zero stress trade. Because if that just comes back and taps this and comes back up and takes you out, you made a little bit of profit and you're moving to break even. And the reason is because you've got your fail safe here. You don't want to see it come back all the way through all of that again. It's already run into your range, balanced it. Now you want to see it just continue pushing lower. So keep your eye on NQ there. And back to this mess here. And notice opposite. We have you don't have here I was saying, look, this isn't as clean as NQ, and then you go over to NQ. It's not as clean as your you've got reprice rebalancing going on here. So if you know how to look for repricing, rebalancing, this is definitely the cleaner one there. That reversal right there. So for this one, you don't want to see it break through here with a body, come back up inside it, find some support off of that, continue going lower inside this range here. And you want to see this breaker get taken out. So you want to lose the mean threshold of this order block. So that's kicking off of that mean threshold of the breaker over here on the daily. It's giving you some sort of response off of that, which is what we would anticipate. Now, whether or not it's a big enough response to drop us below this level right here, we want to kick back, close below that to continue short. If we close higher, then tomorrow we look for a trade back into that little fair value gap inversion to continue pushing higher for the rest of the week. So your ES. What's Dow Jones doing? Dow Jones is just as wicky right now. You want to see a body get through this, not just a return to old highs. See how you're getting we literally opened up on it, and now we're starting to push through higher. So now there's a divergence, you see that? Sorry. Dow Jones is making higher highs. ES is making lower high. NQ, lower high. That one's making the higher high. If you look at all three, see, lower, lower, higher. So do you take the stronger of the two and go higher with it? Do you take it the weakest one, higher candle, and this is just starting to open up now, smaller. That regular trading hour gap, and that's huge. So the high that took out the previous high as a fair value gap just created right in here. The high that took out that does not have one. It's the next candle down. See that right here? So that's this candle here. This one. This one creates a swing for you early. This one is a later one. This one hasn't even given you a swing point yet, other than this right here. But we're still making higher highs, so. Is this just running for liquidity above the market? So then it can start getting back in sync with these two? Is this a turtle soup entry, or are we waiting for these two to catch up? Hello, Tok. How are you? Short 59, 2. Lori, how you doing, buddy? We were just talking about you this morning. We missed you. Abs was asking after you, wondering where you were. It's like, if we don't have the carrot on the markets and we don't have Lori here, what the heck? What's going on? There's just a disruption of everything in the markets if we don't have the carrot and Lori around. So I'm glad you're back, buddy. Thanks for popping in. Nice tape reading. Thanks, Christoph. So ES, we're back up inside this one again. See that? You want to make sure the body doesn't get above this though. See how it's closing? The bodies are closing on it, reacting off of it again. I want to see this one give way. Ideally, if you really want to get bearish on this, I want to see this breaker give way on the downside to really tell me that, okay, now I've got an intention of going lower. A break in structure, as it were. Disrupt some of this trend line phantom crap going on here. Dow Jones, is it just running for a some liquidity above the market and start to get back in sync with the other two markets? There we go. That's what we're looking for, is it to break down below here. And it's at that level that we talked about, that breaker, mean threshold, obviously the mean threshold of that fair value gap right there too. Getting a reaction off of that. We're getting a swing point occurring in here. So trade back to the order block. Now continue shorter. If we come back up in here, I might just get short on that. Let's put one in here. I want a line in the sand. And my stop loss is going to be tight on this one because I don't want it to get above that order block there. So if you're trading off this order block, if you went through it and you're trading off the order block, which is fine, you can do that too. I prefer to get the retap of the reversal. Okay, that one's good. Why did that not take me in? Sometimes there's a little delay. Came back, kissed me, gave me a hug, but didn't take me to the prom. I literally traded right through me. So there must have been, that spread must have opened up past 50. Because from there, 0.75. Look at that. That's one, almost one. So it was 7.5, 0.75 spread. And it still wasn't enough to get me in there. This time. In my opinion, Dow was behind, only up 5 when NQES both up over 1%. So divergence at high suggests to me that the price may be considering a turn lower. Lori, glad to be back. It's good to have you around, buddy. It's good to have you around. 30 handles here. Invest. Get it. Did anybody else get rejected on that play? Like right at that entrance there? Did anybody else get denied? Like, look, that was clearly through my trade. and you see it sitting at 0.25 to 0.5. For some reason, it decided, no, I'm not going to give him an opportunity to get in, and it went to 0.75 or a full handle right at that point, not to let me in. Is that suspicious, folks? Is that suspicious or what? Let's put that carrot down here. That's all right. I hope somebody else got in there. I got in on a live one there anyway. MT5 let me in, but TradingView didn't want to let me in there. Yeah, I think you're right, Laurie, but that's the my line in the sand is that guy right there. So it's either going to hold or it's going to blast right through it. You're right. If this is actually a bullish market, this shouldn't hold, but look for your 50% of your range. Oh, now it gives it to me. So it's got to break this high here on the upside candle. Now for me to go, just get bullish again. Nice fill of that fair value gap here. Pull your fib tool from here to here and look at your 50% of your fib. There's 50, 62%. That would have been nice had they took me in there to get to break even, then to 50%, take some out here. So now I have to wait again. If we get to 50%, I'll move it to break even. That's like an optimum trade entry to go along. I don't like all this waffling going on here. Look at that 50%. It's been worked like crazy there, hey? I'll take that out. I'm going to wait. All these $50 hits. These are not trades. Oh, something with intent. That would have been a nice little run, but it's not giving us what we want. So that's the line in the sand now. I guess this is up inside this breaker below this low here. Just take me in there. No, good. He's closed above it. You see that? So further upside. Comes back. See how the body trades above it? Comes back to the fair value gap here. Check and then go. That would have been the only trade right there from there to the 50 to the 62. Take a small profit out of that inside that range. You have to be quick on that one. And then this whole slow meandering back up again. After hitting those two areas, and then you see the slow starting to grind back up again inside that range. Dodging the bullet like 50 bucks at a time is not the way to make a... It's probably going to try to make up for that losses we took in oil earlier. I took in oil this morning because I wasn't watching it. Where did that end up, by the way? Oh yeah, that kept going. So there, that showed you the upside run, gave you those multiple opportunities to clear out your trade, and said, okay, fortunately, I will take it with me and carry on higher. I tell you, when it tells you I'm on a direction, that becomes a linchpin for you, and that inversion now becomes the key level for you to go higher or lower, higher, go higher, higher, and it continues to take off. When you get in these consolidations, that's why they get so challenging. When you see this swing point and the swing point's not being supported, and it keeps going higher, come back down, not being supported by a big displacement candle down, and it just keeps rocking it higher, then you know that you're on the wrong side of the price if you're trying to get that short. They really are really key levels to look for inversions. They will tell you a tremendous amount. And if you keep getting taken out on both sides of them over and over again, then you're in a consolidation and wait. Just move to the sidelines till you get something significant. Yes. Still going higher. Here's the one where you go, okay, here's when I'm going to go short. 1, 2, 3. Those are your 3 different entries. So if it closes above this entry here again on a body, then you're wrong. You're going higher. So there's the body, closes above it right there, and you go, crap. Opens, gives you an opportunity to get out, break even. That's what the fail-safe is for. And then it continues higher. So just that simple fail-safe rule right there, so that your stop loss doesn't get taken out, is a great way to protect your principle if you're wrong. But if you're right, you've really caught the tiger by the tail for a short. So now you got these equal lows here. This fair value gap fill, this equal low right here is upside. 612, 622, ES. Like Abs were saying, he's looking for these old highs here, this fair value gap above us here. this breaker. That breaker is sitting right at 127. I like 127. Where 127 ends up. See, here's your, this is a really good example right here of a swing reversal. Body trades above it right here. See how it closes on it here? I'll make this a little bigger. See how it closes on it here? Body trades above it. You trade back into it here to go long. You catch your long, look for your breaker. You run through the breaker. But if we get a body above the breaker, you start to go, oh, that's exciting for a further run higher. If not, that's an exit point above you at that swing. So you catch here to here. If you look at your fib tool, you always pull it from your nearest swing point. 50%, you would have been just short of 50%. So 62 all the way up to your breaker here. That would have been your small range for a quick. So you would have actually bought a premium to go higher. Yeah. Then look for the reversal in the opposite direction. And it's right there. You see the difference between that there? If I stretch this out a bit more, you'll see it. That candle's high and that candle's low. There's a small little fair value gap in there. The body trades below it. Then what do? We come right back up into it. Ding! And hit it perfectly. Right there. See that? So don't think they have to be these big massive opens, big massive SIBIs or inversions. They can be just a small little one, come back, check, run all the way down into your fair value gap below you here. Inside that range. If you pull that range now and you start to trade right off that, and again, you have to see this enough times to know that I'm going to trust that, I'm going to take that. If not, then you don't take it. But if you see it, it connects with it here perfectly, runs all the way back down into a discount array inside that range. Then we get this reversal happening here. We take out this low right here, reversal, body trades above it. You trade all the way back inside it with precision right here, and you're starting to run back up inside this range. So you look for your 50% from here to here. So if you would have seen this trade up and you go, I'm buying one here, one here, one here. You would have had all three of them loaded on. And as soon as you get to 50%, they all move to break even. Then you go to 62%. This one may have taken you out right there at break even. This one here is safe still. You get to 62%, pay yourself there, move to 50. You don't get 70%, that's okay. You bang around on there a few times, you roll over, it comes back down and takes you out at 50. So those ones would have been in profit. You would have scaled out a portion there, would have come back. You get to reload them on again. This is buffering. This is what I call buffering. You get to actually add more. You get to do that same trade all over again, all the way inside of here. Stop loss again is down here. Inside that gap, you get a nice little retracement to a perfect entry on the gap. Close, run up, rejection blocks, breakers, rejection block, old high, inside the range. And you're obviously up into a higher range here. This internal range liquidity. liquidity, you went to external range, go to the next range above, which is this guy here, fair value gap above you, breaker above you. You've traded into it. Now you're back inside this range, big bold candle, and this little guy here. You got to get below this one for it to matter, and you don't, so you're still stuck between this candle here and this candle here. Fair value gap created. Nice fill of the fair value gap here. We don't get a body through it, so that swing point doesn't count as a swing. We just come back and fill it with a wick. No body gets through it, so you continue to the upside. So if you're managing this one with the trades of as soon as I get a reversal pattern happening and we close below that and come back into it, then I'm out. If you use that as a method for managing your trade versus this whole fib tool thing, then this would have been your opportunity to say, oh, if it trades below that on a close, I'm out. I'm closing that trade off here. But it doesn't. Suddenly it reverses on you, goes all the way back up, cleans out some more liquidity for you. And you go, I still haven't hit my reversal. So your fail safe would be here. If this one forms here now, your fail safe sits right there. Right now it's sitting down here. It would sit right here if that becomes a fair value gap. And these trades you got on here this morning are still, despite this little snap back on you here, are still valid if you're using the fail-safe principle only and not the fair value gap. Sorry, the fib tool. They've got the pros and cons, obviously. Ooh, now we've got a breaker. Look at that. Now you want to get short off that. See, it took that high out, came down all the way through whilst I was yakking away, snapped all the way through, took that one out, took this one out, and took the breaker out through the mean threshold. Your ass is next. Boom. Came back up inside the breaker, short. Again, stop loss has to be up here, so make sure you've got your leverage. It's got to be really small inside this trade because it's a huge fair value gap on you here. Ideally, this breaker should hold price now. We should continue back down. Oh, damn, 11 o'clock. I missed it again. The 11 o'clock, 65%, 50 to 60% of the range. Of course. I'm going to have to put a sign up here that says as soon as you hit 11 o'clock, look for 50 to 65% or 50 to 62% retracement back into the range that was created between 10 or 9:30's open and 10 or 11 o'clock. So whatever that range is there, 9:30. From here to here, pull your fib tool and look for 50% retracement. If it doesn't and blows right through you again on this upside, then we definitely have more upside because it's not even giving you the 50%. So breaker. This breaker is important. You kind of just got to put your... Yeah, I see it's already traded through it already. Back up inside this one. So for me to go bullish, you got to get all the way through this, climb up on top of it, get some support, and keep pushing higher. Otherwise, this is bearish still, despite this big monster of a fair value gap. Gotta set an alarm on my phone for that. I do have one on my phone. I've just had them all turned off. Different time in New York, so I have all my my alarms are set for Canadian time, so I shut everything off. Okay, I got my. See, now I've got now that you've lost the breaker to the upside. Look at the 50%, 62% of the retracement in here. It's kind of like a dodgy one to be in because you don't know whether or not that's going to push for higher prices now, or just coming back into a optimum trade entry. So the highest one, which is this guy right here, if a body trades above this, body trades above this, then you're probably going higher inside this little range. We haven't got a body above here yet. See these little swing points here? Reversal, body gets above it right there, trade back into it, take out these highs, reversals. We're just trading back into them. We want to see a body get above here though. Reprice, rebalance, perhaps this guy right here. That's your CAM Model 3 entry. If it closes above 50%, it's going higher. And there's that little wiggle room you give yourself there. What's going on there? Close that out. Wait. Go back. I'll be right back. Alarm going off. Stand by. Sorry. Right off the breaker here. Body gets above it, comes back to it, finds support, continue pushing higher. Off this breaker here right now, so order block. Reprice, rebalance. So if your breaker, I'm just trying to look for, if you're in a big range like this, you either use the Derrick principle and you wait for a nice premium level to go short. If you're short at this, you think this is the swing, you wait for a good premium entry to go short. Or your fail safe, I'm just trying to think of how this would, your fail safe would work off this breaker. So if you're trading back inside the breaker, your mean threshold is your line in the sand. If you see that trade through that on a close and the body closes above your breaker, it's the same thing as these little inversions. If the body trades above it and says, guess what, I'm going higher, would make sense considering the range you're in and the big open gap you got above you with your swing points resting above you. Body trades above, one opportunity to get out, cut your losses and wait for the premium array to present itself. It comes in here, stop losses here if that's the direction you wanted to go. That 16 or 617 looks like it's in range for a tap. We did not get the reaction we wanted off of this, so wait for something. Relative equal highs. Wait for something else to set up. Just to the sidelines, or at least that's where we're looking. 12 o'clock. That'd be nice to see this high get taken out for the 12 o'clock run. Hit these highs, then roll over at lunchtime into lunch. Start heading back into that range. We'll see how that goes. Good morning. Welcome back, Dave. Thank you. Clean above 51.21. So there's no swing here, but we do have this inversion. See how the inversion held price, body trades above it, come back inside it, trade up higher, continuation. I love this swing right here. There's a swing, fair value gap, body trades below the breaker. We trade back up inside the breaker for continuation on the downside. Yeah, it's got that fair value gap above you at 5107, 5109. 51.10, 51.12. There's a few PD arrays above you, but they're all looking, this one here especially looks good. 5106. I love the way that Michael, he's mentioned in the past, if one candle goes through 3 arrays at one time, if your stop loss is sitting behind that, your ass is next. So there's 3 arrays, 1, 2, 3, boom, all through all of them, right to the back end. That's where a stop loss would be anyway, and it would have been just a straight takeout. So you almost have to look at your breaker as your fair value gap. If you're entering in, you go 1, 2, 3, and if you trade above the mean threshold of that candle on a close, then you're wrong. So you might have to set some rules up for yourself around how you trade a breaker, where you put your stop loss and where you put your fail safe inside these breakers. You'll have to come up with your own set of rules on that, but I think that's what mine's going to be with breakers. I got in short at 17,584. NGU, did you take your do you have a fail safe if it went wrong, or do you just put your stop loss up above here? So as soon as you see it trade through that order block, that breaker right there on a close, it closed above the mean threshold, you can pretty much guess we're going to go higher. And again, if it doesn't, because sometimes, like Derek has mentioned in the past, sometimes the mean threshold gets hit and then you get these big deep retracements before it finally comes back and takes it out. It comes back into a deeper part of the range. So that your decision has to be whether or not that's your line in the sand or not, and what rules you want to develop around that. Again, that's your own trading style, I suppose. Clean above 5 there. Good morning, welcome back. Stop, hit, got hit. It's probably going to take out the 1 hour fair value gap at 17,602. 17,602. Yes, right here. That's what we're looking for it to fill that. I think it just hit 17,607, so that would put you at 17,617. It's got to come up to the caret there for a full clean of that. The low is 615. So we'll put the caret at 615. There you go. Are you streaming tomorrow morning too? Yep, I'll be on every morning now. If so, at what time? Got to be here to watch the stream on time. Yeah, I'm usually here at 9 o'clock New York time. So that'll be 7 o'clock Canada time in the mountains. I don't know what that is in your time there, Doc Talk. It's all caught up with the yes now. That's 1602. Up over 5K today doing the Fair Value Gap 1 hours and 15 minutes. Good for you. Good for you, NGU. How do you know that price is going to keep going higher or lower after reaching a rejection block, the 50% level, even when it left empty fair value gaps behind? Well, that's a typical thing. If it happens around 11 o'clock, you usually get a 50% return. Always kind of look at your inversions as levels of support or resistance. Talk. That's what I do. So yeah, you can see it's left some fair value gaps behind. How do you know it's not going to turn around there? Well, you want to see it come back to the breaker to get short. And the moment it doesn't, and it trades through the mean threshold of that breaker all the way through to the opposite side of it and closes above it, then you go, nope, that breaker's not going to hold. That actually, because breakers we know are strong candles. So if it takes it out all in one candle, you know they're going to have a bigger dig back into this range, a deeper one. So you wait, look for this fair value gap to fill. 25, 27, 32. 17,607. So yeah, you got to look for your inversions providing a level of support now, right? And whether or not your breaker holds price. If the breaker doesn't hold price, fair value gap's probably not going to be reached for yet. You wait for these inversions to happen. The runs above. Now you say you got to go bearish the moment you break below that. Good. So now you go bearish, and you got to look at the range that you're inside here. So you want to see this trade back to the mean threshold, and you want to see that either hold price or reject price and go even further and deeper down into your range, retapping these old ones back here. So now I'm bearish. We just took out a high, so now I'm bearish, but that's you're bearish inside this swing range here, then this range, then this range, and then the whole range. So look for that order block to hold price. If it doesn't, if we blow all the way through it, look for this inversion here now to provide support. If we trade all the way through it, to come back into it, to continue looking for that fair value gap, and then that one below. Because you're trading between premium array to discount array inside that bigger range. But you have to make sure that you're monitoring your PD arrays as you go down. You don't just assume that it's going to go here. You say it's got to break through the mean threshold of that candle. If it doesn't and comes back up, look for what candle's above you. It's this candle here, that little inversion right there, this fair value gap here. There's your inversion. You got this candle right here. It's the wick. You want to see it react off that now, come big snap back on it, big wick. Revisiting it like this tells you that it wants to keep pushing through the mean threshold here. You want to see that snap back, and when you see it coming up for another run again, then you go, wait, you've already just filled that. You want to see that typical bounce off of that and then start hammering back down again. See how it went to the body now? Opened on the body, and now we start to react off at the mean thresholds holding price of this candle right here. So you're between this candle here and this candle here on this little swing. One bold candle going through it. So if you're going from premium to discount inside this small range right here, you fit the mean threshold, expect the mean threshold of this candle, or at least the high of that candle. So there's the high. There's the mean threshold. Good. So now we run high, pulling back, eating through this. That's good. You're eating through this and this. Now you're looking for a lower range. This has now become an order block. We've wicked through it. 5 seconds, 4, 3. Get through this thing here on the other side of it. Oh, look at that, it just hangs right on it. Come back up. That candle's low. Mean threshold. Not important candle. Now you want to see this keep pushing through here to get into your discount range now. So you're kind of looking down here. Pull your fib tool from here on the larger range now. 50% puts you here, right at the edge of that fair value gap. The lower range, if you went from here, from where the displacement begins, you just hit 50%. You just clipped over into the discount range. You want to see, if you were going higher now, you want to see this mean threshold give way. If you want to get into a deeper discount, we're looking for down here. Y11. I don't know. Y11. Michael's never said 11. It just seems a time and price time where you go back through your charts, watch the 11 o'clock candle, and you'll a large percent, greater than 50% of the time, you're going to see 11 o'clock be a reaction candle. And more precisely, 11 or 1102 or 1107. Look for those three numbers. 1102, 1107, or 11 for a swing point. Oh, sorry, back here, swing point. There's 11. Boom. 1102. Interesting. 1107 is going to be in here somewhere. Where's 1107? Swing point 7. Then off to you're going up here. Then you're looking at 27. Look for 27. 30, 32. There's 32. Write those numbers down. Write those numbers down. Should wait for an intermittent term low to be created first to go short. Yeah, I want to see it take out this stuff down here now. Like you want to see a significant low get taken. Trade below, come back inside here. It's eating through this guy here. So you're really between this range here now and the upper candle there. Mean threshold. It's eating all through this candle. A little imbalance right here. Back up inside that order block. This one's not valid yet. That one and that one and that one all been eaten up already. This guy becomes valid here. Hello, 22 model for PA. Lower PA. If you look at this as a reprice rebalance, breaker inside of a reprice rebalance, I wouldn't have caught it. I wouldn't have caught it. This one's not important anymore. I like this one up here. Too choppy. Be patient. Wait for a decent setup, you guys. Don't rush your trades now. Why is that breaker failed for short? Why is the breaker failed? Why did that one fail? Is that what you're talking about, Ferpa? Why did it fail? Well, we have a huge range here to come back into. And we have multiple different swing points to come back and recollect. This one, ideally, you want to see its support price. It fails the moment you go blasting through the mean threshold of it and you close above it. That's where it fails. You expect to just see this bold candle down, come back up, tap it like this, and then react off it and start going back down. The fact that you're seeing it do this multiple thing, and we've seen this multiple times now. We saw it earlier down in here when it kept tapping and tapping, and we're like, oh, I don't like this. You know, it's trying to get back up there. It gave us this false rundown and then finally blew through it. So these attempts to try and like, we did not get a clean break straight down. We had this multiple attempts to keep going back up. Multiple attempts to keep going back up. You want to see that just come back up. Your classic one is it just, there's your breaker, rolls down, comes back up, just taps it and goes. For example, there's one really good example right here. See how we swing on this low here? That becomes the breaker right there, that order block. That's the breaker that takes out this swing point here. Takes that out. Body trades all the way back through it, nice and clean. Body breaks the high. You come back, tap it cleanly like this, and then you leave. You leave with intention. That's what you're looking for, and you're not going to settle for anything else. So your stop loss would go here. Mean threshold is your line in the sand. If it breaks the mean threshold where the body comes back into it, get out and wait for it to come back through. You want clean stuff. Don't settle for what we had to settle for here. Getting beat up multiple times, coming in here, smacking, and then finally drove through on you. So take what you want the market to deliver you, and if it doesn't give you what it's delivering, then move to the sidelines and wait for a cleaner setup. And that's your personal preference. That's your tolerance level of what you're willing to tolerate the market giving you. And that'll be experience over a while. You'll see me just go, no, I'm closing out that trade, or I don't want to, that doesn't look good. I don't like the way that's acting. If you're seeing this kind of stuff, make your own personal rule over. I don't want to see these multiple candles banging around. And if it takes off on you, don't get upset that you settled for this rule because you got beat up in it before and you tend to forget the pain of getting beat up in that. So set your rule, follow your rule. Don't let your emotions rule you, and to say, no, if I'm wrong, if I'm right, this thing should just hit it and go. If it doesn't go and it's 1, 2, 3, 4, 5 candles, or here, that's the 1, 2, 3, 4, 5, 6 candles haven't got out of there yet, then you see this one start rocketing through it. You go, no, that's not good. That's not good. Close out your trade. Because you should not see it just come back there and revisit it. Nowhere in that little example we gave down here did it revisit it 6 times. It went once and I'm out of here. That's what you're looking for. If you catch the same kind of thing with the, there's your inversion, or there's like, well, it's not really the swing point, but here's another example. You want to see this break the low with a body right here. See how it trades back into it, right? Oh, it doesn't really trade back in it. Forget that rule. Forget that one. I was just thinking if you got a body trade below here, you come back up, you tap it, you have a wick below it. And this one, I want to give you one that's actually a good one right here. So there's your breaker for run up. It runs down through the body, breaks below it right here. And then we trade back up into it here, right there. You want to see it, just tap it and go. It comes running right up into it. The next candle opens and runs away. You do not want to see this kind of crap. Bounce, 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 bounce. Set your rule up on that, and you guys decide how you want to trade that yourself. When you get into this chop, you shouldn't be playing around in that kind of stuff, so just wait. You go over to ES, and everybody says, look at ES, though. It's so much cleaner. Do you want to be in, oh, mind you, that's a 1 hour chart. That ES doesn't look that much better. So breaker ran up above these these highs here. Consolidation, run up. Oh, sorry, we broke below it right here. Come back up, tap it, tap it. You want to get out of here now. Came back up all in again the third time. You should be getting really suspicious here. Finally ran up like this. And you go, that's definitely not good, because now we're through the mean threshold of that candle. Next one through. And now you're back up into your fill. That's why I like Derek's idea of, if you're going to go into something like this, forego that when you got a big open gap like that, and look for a 50% or higher premium array that you could reach for to get short on. That would have been a nice little perfect entry for you short off the breaker here. That's the breaker you want to see. It hit a breaker and then reject off of a breaker, not bang around on it a bunch of times before going through it. There's a macro every hour, but 11 is a significant one. Yes, 11 is definitely a significant one. And Derek's got some great ones for the afternoon too. He's really studying that afternoon price action. So whenever he does those afternoon sessions, I would suggest you guys get in on his session. And he will post that on the Telegram channel for you folks as well. Pro shop work today. Thanks for your time and knowledge, Darren. See you tomorrow. See you, Derek. Take care, buddy. Been really choppy. I tell you, when this market gets smoothed out, we're going to be doing some smashing some stuff here. What do we got over here in oil? Okay, I don't want any more reminders about my bad trade there. I should have been watching. So just for those, how many people got in here? 43, not very many today. Okay, just in case anybody's new, I want to show you where I left this alone, didn't come back and monitor. I was too busy yakking with other stuff. So I was taking this as a swing, and I entered in 1, 2, 3 trades for a short. So I got the first one here, see right there, second one right there, third one right there. Then we had a body trade above it. Stop losses were all sitting up here. Body trade above it gave me a bit of a squeeze on my stop. This is where I should have been watching this going, oh, that just traded through my entry. I want a clean entry. So when you see that go tap, you'll see this many times. It'll just come up, tap it, and go. It leaves right away. So it ran through it, and then a whole body ran through it, put a squeeze on my stop, then literally came back in and gave me 1, 2 places to break even. This attempt would have came all the way down and gave me a third attempt to break even, so I would have 0 losses on that. Consequently, I wasn't watching it. It traded down. I was slightly in profit with everything. Then it rolled back up. Once again, said, I'm going down. Nope, I'm going up. You're in a consolidation. It's a linchpin, so expect to see it bounce around between the two. It broke above, came back down, inside, mean threshold, said, you got a couple more opportunities to try and clear your trade out. Are you around? Are you still talking? And then all of a sudden it went, all right, now I'm leaving town and I'm taking you with me. So there's the stop loss up there. It took them all out right there. Multiple opportunities to get out. So as soon as you see this happening, you go, I move to the sidelines because I could just get beat up in a consolidation here, or this could take off on me. It does not give me what I want. I want that. It's kind of like that breaker we were talking about. I want a clean hit off of that and go. If I don't get a clean hit off of it, get really suspicious, get your stop loss, and get ready for your fail safe to save you. Just look at that. Now, if you're really savvy, you say, okay, I'm going, if this keeps happening and I go, I'm going to go long now. Let's say you did this. These are the two optimum entry points for longs and shorts. So if you're going to go long, your optimum entry should be here, because if it fails, you get an opportunity to get out. If it goes short, this is your optimum entry here. You get in, it goes short, you go, great, now I'm going short. Then all of a sudden it comes back up, you go, ugh, sorry, let me reverse that. If this is your fail point, you want to go short here. If it fails, you can get out at break even. If you want to go long, you go here. And all of a sudden it tries below, you go, ugh, I'm out. As soon as it comes back to me, I'm out. So you get out right there, you break even. You wait. And it finally breaks above. You go, great, now I can get back on the horse. I can go long again. Put it in here. It comes back, tags you in. If it trades below you here, you're on the wrong side of it again. And then you catch that for a long. So you got to keep watching as this breaks the linchpin, that point where it either goes higher or lower. It's either their swing point, breaking an old high, or it's a continuation. We don't have a swing point down here, so you don't have anything to confirm a swing below an old low. So you have to rely on this being the support. Go higher. And sure enough, it does. See these lows get taken out here? Swing below them. There's your inversion. Body trades above it right here. And you want to look for a return back into this area right here. Body trades above it right there. Trades through your breaker right here. You can either trade off your breaker, which is in a premium. Don't forget, you say, well, I'm going to take Derek's approach. I want the discount, so I'm going to wait. Forget the breaker. I'm willing to risk this just taking off on me and never coming back to fill this. Or I want it to come back into a discount array. Because now that I've broken this, usually it likes to come back and just tap it and go, which would be just below your breaker. So as soon as it trades back into it, you can go 1, 2, 3. 1, 2, 3. Perfect entry. Small little squeeze on your stop loss, which is sitting down here. As soon as it breaks through the top of that, comes back, finds support at it, I move to break even. So it doesn't come back to find support. It just keeps climbing. you scale out a portion here and here, move the rest to break even and wait. You can use that principle, or you can just use the principle of fail safe. As soon as I get a reversal confirming the opposite direction on a fail safe, then I'm out. So for your fail safe would be right here. So if it trades a body below that, which it does right here, it opens on that and it trades back up. You go, if a body closes below here, I'm out. That's my rule. It closed below, so you'd be out. Then it would open up again and you go, all right. Or it opens up here, comes down, you'd still be out for sure. So you wait for this now to get broken to the upside so you can trade back to it and get back in sync with the market. Right? And there is your... So if it trades above it again, like we did over here, sorry, back on the other, this other NASDAQ, which we're going through right now. See how this becomes the linchpin now, right? Because we've got no swing anymore. So you've got to look at, we haven't taken out any lows, so you have to use this as the linchpin. So when you trade above it, you start going, okay, now I'm going to go long. It comes back down, trades below you, you go, okay. If you want your discount array inside here, you go long here. If it fails, it comes back to you, you break even. Trades above you, then it trades back into your range, you go long again. So you got taken out there, it trades through you, you go, okay, I'm going long again. So you're going short, long, because of the linchpin. You have to say to yourself, do I want to just keep weathering this, or do I just want to wait for the breaker to get taken out to the upside? In this case, this one here. And then if it trades back to it, then I'll get in long from there and wait for this consolidation to get something to break out of it. It does here and never comes back to it. So despite all these banging around in here, you didn't get an opportunity to catch that run. Unless you stayed in this here and just let it go. So there's pros and cons to fail safes, pros and cons to trailing stop losses or trailing fail safes, and higher time frame objectives. Are you aiming for a higher time frame objective? You find an opportunity to get back in sync with it, aiming for a higher time frame objective. You're willing to weather this stuff. That's your own trading style. Breaker. Run below your breaker with a body. Trade back up inside it. You want to see it leave with intention of leaving. Back inside a range. Pull your fib tool. 50, 62%, 70%, whatever. Back to fair value gaps. If we're looking at our range in here, you trade off this breaker, which is what we were doing earlier in NASDAQ, and that ran through us. See how it trades back into it, mean threshold, hits it nicely, and you see it snap off of it like that. That's what you want to see. Then you say, as soon as it hits 50%, I move to break even. So your stop loss is here, move to break even. As soon as it hits 62%, everything moves to full 50%. And so right here you've hit 50%, so you're at break even. Then all of a sudden it runs through to 62%. You quickly run into 50. It hits 70%. You quickly run to 60. Then it comes back and takes you out at 60 and then continues higher. You captured all of that on a rundown using your fib tool. And you didn't try to overshoot these extra PD arrays down here. Because I think Ferber was saying, why don't we expect it to go down into these ones here, these fair value gaps? This could be just an optimum trade entry for a continuation on the upside. That's how you use that 50, 62%, 70% to maximize your profits. Because if you're wrong, you're going to get taken out right there at maximum profits. that you would have taken inside that range. So if you are aiming for here for sure, but you're scaling out using the fib tool. That's a way to protect yourself. If you're wrong as well, at least you're scaling out your position inside the fib tool at an optimum trade entry. Reversal, take out a low. Here's your reversal. Body trades above it right here. You don't get an opportunity to get back in on it. So you look for a breaker that takes that out. So the breaker trades, or the body trades above the breaker. Then we come back in. We tap the breaker right there and we continue to the upside. So not only did you get the chance to capture this run on the inside, and you're hoping to capture the whole run, and you didn't because you used the fib tool to scale you out. And as soon as it comes back and tagged you out there, you go, great. Now, if this cleans this high out here, I've just taken this reversal. This becomes a reversal. So great. Can I get in on that? No. You see it starting to climb higher. Well, if it takes this out, that's the breaker. I'll just get the return to the breaker if it closes a body above it. It does. Go great. Now, if it just comes back and taps me, I'm going to take that little sucker and I'm going to go back inside this range. I'm going to wait for that order block there, that order block up there. Or again, pull your fib tool from here. Do the same thing again. Rinse and repeat up here. And the moment that comes back and tabs you there, moves to 50%, you move yourself now to break even, right? So now that's break even. You hit 50%, pay yourself a portion there. 62%, you move your stop loss now to 50. Hit 62 right there, closes above, opens, comes up to 70%, move up to 62. Then it goes up to 75%, move to 70. Then it moves up to 78%, move to 75. It doesn't come back and tag you. Then goes all the way up to 88. Then you move to 78.9. Then all of a sudden it finally comes back and tags you out there. So you caught all of this range back in. You caught that range all the way down. You saw the reversal. You captured the breaker, and you took the fib tool all the way back up, rinse and repeat. It's a simple way to manage these internal range liquidities if that's what you're after. And once that mean threshold has been broken to the upside again, right there, breaks the upside mean threshold, you go, now it looks like we're going higher. This becomes a breaker, body trades above it, comes back to it, finds some support at it, continue higher. Rinse and repeat the same thing all over again. What range are you in now on the other side? Does that make sense? I hope that makes sense to you guys. Anyway, let's go back over here. That finally reached our little objective we were looking for. It took a hell of a long time of bouncing around in there to get down there. But there, we're returned back to our CAM Model 1 entry. And you're back up inside this small range here now. If you traded off of this here, same kind of principle, when you get this really shitty kind of choppy price action in here. Okay, so I'd like to see this run back up here. Take this out. Fill the rest of that fair value gap in right there at 17. So just come running up into here, create another fair value gap reversal for lunch hour, and then continue to come back down. Here's the same example. So if we did run that old high out, you got that inversion, you traded inside the inversion, stop losses here. If you just want to trade the 50%, 62% area, as soon as it finally bashed through all this stuff here, gets to the 50%, you now move your stop loss to break even. Take a portion off here. Hit 62%, comes all the way down like this, hits 62%, you move to 50. It finally comes back up and takes you out right there. You've paid yourself at 60, and all of your trade is off right here. and you would have only lost a small portion more down here. Wait for a reversal. We have a swing. So then when you see this is taking this out, taking out another low, look for a reversal pattern to happen. There's a little tiny guy right in here. So my eye goes in towards, let me get this out of here now. My eye goes in here. Oh, it's already got it already. See how the body's traded below? Inversion. Inversion. These are the areas Michael just loves these things. 1202, silver bullet, entry, boom, boom. You've got this body trades above here, comes back inside it right there. Perfect entry to go long. These little price imbalances are just marvels as well. So there's a little tiny guy right here, here, here. A little fair value gap sitting right there. So I'm going to put my fib tool because you're going to see this is going to be a level of interest. I want to see that one. I want to see this one. Got another one here now. But I do love the way that kind of just went straight up above that, came back into it, tapped it right here, and then left. It doesn't have to be fair value gaps. It can be these little tiny imbalances as well. Now you're inside the larger range. Make sure you use your fib tool to scale yourself out. Or if you're using PD arrays inside here, good luck. There's a whole mess of them in there. And they're choppy as hell. So just to pull the whole range, use your fib tool to clean that up and get yourself out of there, because this is a mess to be in. Breaker, body trades above it. We want to see a body trade above this, not just a wick. So watch these levels here, and we'll see what kind of reactions we get off of them. You want to see now that you're trading above this breaker, you want to see it to provide a level of support and push higher. If it rolls over and comes back down, we've closed above it right here. See that? Body closes above. Come back, find a level of support. Now start taking off. Go higher. Leave this open as a breakaway. Look at the range you're in here and say, what kind of range could I be? 50% puts me right in the middle of that fair value gap again. Pop that so I can turn this thing off. There you go. Finding support at the breaker. Keep going upside. Nice. That's what you want. See that nice little snap off the breaker? We don't want to see all that choppy crap we saw earlier. This stuff. See how this breaker here? We're just like smack, smack, smack. You want to see this breaker. Trade above it, snap on it, and start going. That's the stuff you're looking for. When you see this, You have to decide whether or not you want to get out of that. You want to be in this. Is this suspicious to you? If you see this kind of suspiciousness, that's why you have to study it on the 1 minute chart. You make that decision now and go, I don't like that. Especially when you see that big candle rip through you like that. Or go ripping right up, and there you go, that doesn't look good. That doesn't look good at all. We're looking for higher prices the moment that gives way. And we were talking about that. Sorry, I don't want you guys keep hearing me clear my throat. So hang on. So you don't want to see this this breaker's mean threshold give way like that. This one, come back to the mean threshold. Beautiful snap. Gave you one more opportunity to get in on it. Run. You're back up to this person over here. Huge range. Pull the huge range. Then you say to yourself, okay, if this is my range, from up here to down here, 50%, look at that. You just dropped into the discount range to grab yourself discount like the algorithm does. You get to be the algorithm now. I'm going to dip in here, grab myself a little discount till I run back up into 50, 62%. So as soon as you hit entry, you hit discount, move to break even. Again, that may be your rule is I just do the 50, 62% inside the bigger range that I'm in, and I'm going to pay myself because it's just been so choppy. I'm going to pay myself. So as soon as it hits 50%, which is right above you, move to break even. Let's say you got it in the mean threshold. Move to break even. Hit 60%, move to 50, pay yourself at 62. Hit 70, move yourself to 62, pay yourself at 70. Then you see it would have gone up to 75, 80, 78. You would have been at 75 and you would have closed out right there. So if this reverses on you and comes all the way back down, you maximized your profits inside here with that simple entry there and exit there. You have to decide whether or not that wants to be your entry or exits. You have to decide that. So now if this becomes a swing point above these little turns, if a body closes below that, you do another rinse and repeat. You need to go below that, come back up inside this candle or this candle to go short back into this range here now. And there's a discount array below you here that still hasn't been hit yet. So watch inside this range here now. See how you maximized, even if you're in the wrong side of the market, you still captured this against the trend trade. If this is going shorter, you counter trend traded this and you still collected money from here to here off these fib entries. So watch here, you got 10 seconds to see where this closes. It just came back into that order block's mean threshold. Now, if you want to see this, if you're bullish, you want to see that starting to push through here now. You want to see it close above here. Eat through that 3 arrays right there in one, and then you know that high is going to get taken. Same kind of thing as we were talking about with the breaker. I want to see a clean snap off of here now. I want to see that start really booking it down. I don't want to see it revisited here again. It's already done its thing. You want to see it take off. So what you want to see, now you see how it keeps revisiting this. It's done its job. There's no reason for it to go up there unless it wants to keep going higher. So watch. Now we've eaten through 1, 2, 3 PD arrays in one candle. What's next? And there you have it. Almost there you have it. The spread would have taken your stop loss right there for sure anyway. Order block's now valid. Come back, tap it, start pushing higher. Mean threshold. It's been hit once. Is it going to hold again? Create some equal highs. See how it reacts off of it? I love seeing that reaction. Now that blast through it, that's fine. Just watch how it reacts off these PD arrays. Now you want to see, where does it close in relationship to that candle? Because you're between that candle there and this candle right here right now. And now that we've traded above that candle, are we going higher? Sure. We've taken out these highs now. We've got a new fair value gap forming here now that we've taken out some highs. So now your eye goes to here and you go, is this the reversal for this particular range? Not the whole damn day, just this small range here. You want to see it get below that, come back up and find support at it before you take this breaker out. If it rips all the way through it, look for the breaker to provide support so you can get back into a discount array you look for inside here, which is this fair value gap, that one there, that little price imbalance below you, and that order block there. So there's some key PD arrays below you. And body breaks above, gives you the hint, I'm going higher, comes back inside, and we're still pushing up higher. Rejection blocks next. Well, I guess still the mean threshold keeps trying to hold that at bay. We'll see where this one closes in 3, 2, 1. So, see how it just popped above it? Come back inside it. Now you're expecting that to take out the rejection block, old high. And there you go. Old highs taken. So now you want to see a fair value gap form in here, rinse and repeat this whole sequence all over again. Then you got to say to yourself, where do I want to trade back inside this range here now? So you're starting to really move your eyes to, I've taken out a high. Do I get a fair value gap reversal pattern happening here? Can I catch a short off of that? Where's the optimum entry I want to be in for the short so that if I'm wrong, price will tell me, no, I'm going back the other way. I can get out at a break even. Those are the kind of things you should be looking up. As this sets itself up now, that's what you should be looking for, or thinking to yourself if you're using this reversal pattern. Before it even forms, you're looking at it now, you're saying, I want it to form in here. And now a body getting above that, that's even cuter. That's sexier still, right? Big wick now. Look at that big rejection off of that level. Did we get up to 27 or 17? What's the low on this candle again? The low is 15. Did we get up to 15? We did. We hit that right on the money. See how we snapped off of that real quick? Finally filling that fair value gap in above you here. Old lows, equal lows, fair value gap, snap. Look for a reversal at a key level on a higher time frame for some quick money. So you're using the higher time frames now to look for an opportunity at the lower time frames for our little key setup here to start happening, to get short, even if it's for some quick counter trend handles. I like this area right here. So there's it's finally worked its way back up and taking that out for the PM session. Now we're into the lunch hour. Takes out that 11:30. That's what I want. Like to see that. Good. Now see how this is returning into here. I'm going to go short there. Not that you should go short there. And the mean threshold of that candle is what I want to look for. So then I'm going to come into my take profits. It's going to be right off of here. My fail safe is right here. Just above the 50%. Looking for a discount array. And the discount array inside here is this breaker and this fair value gap. So I'm looking for this thing to provide a level of support. So the mean threshold here is important to me. If I lose the mean threshold, that's the line in the sand. So if I trade above that and come back to it, I'm out before my stop loss gets taken. So now I don't want to see this get revisited here. And that's the, now I'm going to move right into 50%. So I'll make some money. 62% hits right there. I've only got one on, so I can't really take it off. So I'm looking for my full, if you have one left on there, you only got one on, that's 50%. So it came all the way back to 50%. So you made 25 bucks, but just making these little $25, $50 hits. So I would not have liked to have seen that anyway. That's why you pull your stop loss in tight. As soon as you hit 62%, I didn't have more to take off because I only got one lot on. So typically you would take one off there, move to break even. So you're guaranteed at least half of your profits are in. Would have came back and you would have made a last little bit of profit there. There's the mean threshold. See that right on the money there? That's the line in the sand. You don't want to see it go any higher than that. Now you want to get down into this discount array. So watch this. This is the discount array. So look for this guy here next. I would take that stop loss, I'd slam it right up against here just because I wouldn't want, if that's where your entry is, you do not want to get any lower than that. You don't want it to come back there and revisit that again. There's no need for it to come back there. It needs to get into a better discount. If it does come back there, it's got some more intentions of going higher as far as I'm concerned. And that inversion is still finding support at it. See what I mean? You want to see it get below that, come inside that to start digging into here. Multiple tappy tap, tap, tap on here. And you have to say to yourself, no, I'm not putting up for that. It's not what I want. If it's not giving me what I want and not acting the way I want, move to the sidelines. And if it runs all the way through now and takes the profit, then that's fine. You have to decide how you want to be treated in here. and you're about to hit it right. You already hit the edge of it here. The last little piece is right here. Just came down to the edge of it there. Inside that discount array, if you pull your fib tool there again, you'll see that that's a discount from the high to the low. 62, you just pop through 62% into the discount arrays. That's all you need to run these little equal lows out here. Just enough to clear that little low out right there. What's the low on that? That's 95.25. 95.25, those are equal. You got this last little piece in here. So that mean threshold is just holding back price. Becomes an important candle. You're really between this guy here, that guy, and this guy right here. Inside this smaller range, you have the breaker and the order block, the inversion, and the fair value gap. These are all in the discount array, and they're just tapping on it constantly. So that tells you there's a level of support here right now. But are they just engineering liquidity and a fair value gap? Sorry, a consolidation. Watch the mean threshold. Shouldn't be revisiting this. So that little run on those guys there, running on these guys here. All this engineered liquidity above, the engineered liquidity below. You take it out below, take it out above. You come back into the middle, engineer a little bit more. Get some more discount portion right here. Keep your eyes on that right there. I think I'm going to enter a trade and walk away. No, you won't. How's that? That's friendship right there. Invest. You got Russell. He's trying to slap you on the hand and say, no, you're not. You just wait for a decent entry. There you go. There's your discount finally. Now you want to see this eat all through here. Because now we have a swing point. Now you have that inversion. You want to see a body close below this. Come back up, find some support at it, eat through that. If it does a nice little displacement, nice power displacement candle down, come back up into that breaker, get short on that for a deeper part of this range. If not, it's just a wick back into balancing price and then back up again. Come on down. Now you see how this is the candle you're looking for now? Inside this big candle, that guy is inside that one. So if it eats through, okay, just did, eats through the mean threshold of those candles, then you're looking for that one again above you. Is it going to hold price back still? Because now you're between this guy here and this guy here, inside this range. And so far, this has been drilled at multiple times, and this has been tapped twice. Higher time frame premise. It looks like it's got a nice solid place to ground off of. Now, if it really wants to start pushing through this and tipping its hat to higher prices, then you're looking for that's the only other objective above you right now. That's way up there. $16, $17 tomorrow. 17, 16, 17, 18 reversal. Oof. 18 is on Wednesday. 18. Next 2 days. It's going to be up and down the next 2 days. Highs and lows. Russell's like, I've been waiting all morning. I'm getting nothing. See how this is drill, drill, drill against this? I get constant drilling, comes down, gets a little support, and then slam, gets right through that breakers or that order block's mean threshold. Breaker, order block. Who's the strongest of the two? Order block finally blew through it into rejection. You've got gaps going up now. This is going to look good tomorrow. If this closes up high today and then reverses, comes back in here, that's your that's my reversal for this the daily. I'm going to take that sucker right there. Looking for any opportunity here to see a reversal happening on the 1 hour chart. Inside here for the reversal for the low of April swing point for this to continue on the upside right there. I'm making that a public statement right now today. That's the reversal for the April swing. That body trades above the mean threshold. You even come back in and touch the mean threshold one more time before going higher. It's almost like these inversions. These PD arrays are like inversions. Body trades above them, come back inside them, run back up to your next PD array above you. Now you want to see it trade below it, come back into it, get some support at the bottom half of this. Mind you, that's not a breaker, is it? This is the breaker right here. Now you see how you tapped it perfectly? There and there. And you want to blow through that guy. This guy is like this guy and that guy, this guy and that guy. That guy's not a breaker. This guy is. You got some support off it, snap off of it. This was a breaker, snap off of it. You want to see that guy give way. Because if we lose a breaker against a small end candle, then you're getting back into this ranging in. You're relying on, if this breaks this low, that becomes the breaker. What you just saw right here is the rinse and repeat of this right here. Breaker, order block, breaker, supports, order block, gets beaten through, order block, breaker, comes back down, smash right through it, and we're starting to go higher. So you're between those two, and now you're going higher. As soon as we take this one out here above, then you look for this candle here, provide a level of support. Right now it's not valid. We wait till it gets above it. That validates it as one of those little propulsion candles to continue going higher. imbalance. We got anything anywhere else? That's no good. Yeah, it's no good. Right up inside that order block. We traded right up inside it today and rejected off of it back into the fair value gap, which is good. I'd want to see this stay open and continue going higher. I want to see the mean threshold of this breaker here, hold price. If we close below that, then we're looking for a fill here. That this could be a short-term swing to get back to these old lows or old highs, then run back higher. Get back into 50% of this range. I want to see that hold price though. On a close, you want to see that hold price. Swing point right here. Body closes above it here. Tap it here. Go higher. Breaker. We did not take out the breaker on the downside. This becomes inversion. Close above it. Close below it. Close above it. Come back, find support at it perfectly right there. You see that? Taps on it. And then continues higher. Nice. Rejection block. You don't get the old highs yet, but you do have some juicy equal highs, triple, quadruple equal highs there. You want to see it trade below that, inside here, get back inside that small range. It's like 10 cents or something like that. I don't know what that's worth for you guys for trades, but gold's creating that fair value gap right here. See that old lows? We finally traded below them today, coming back up. You want to see that open tomorrow? Trade back inside this fair value gap right up to the mean threshold, all the consequent encroachment of that SIBI. Roll over and come back down. You want to see a piece stay open and start dropping price back down into this range again here now. So I'd like to see that stay open today, and tomorrow open up and get into that little fair value gap to go short. Ideally right there, 2350. 2350 to 2352. I'd like to see gold get into that range there tomorrow. And then roll over and come back down. Nice. All those banks are starting to recover. I have an April low. Back inside a range. Look at that, 62% retracement. Take out an old low. There's a reversal. Your banks. Bank of Montreal. Go long. That's the swing point you're looking for right there. Body closing above it. I'd like to see this come back in here tomorrow or Thursday. Reverse back into here to get long and get back up inside that range. Came back to an optimum trade entry we're looking for down in here. Hits it perfectly. And you're not like you want to call the lows, but I was looking for Laurentian Bank way back here for a while now. I've been trying to block this out. It's come down inside it, clipped it. There's our reversal. Body's traded above it. Today we popped back into it. Now you got Laurentian Bank for a long right there. So this morning would have been a perfect entry to go long on Laurentian Bank, and you'd be up 40 cents right now. There's the reversal. You want to see this get above here, come back, find support at it to continue pushing through the Bank of Nova Scotia. Here's the reversal. Body trades above it right here. We're looking for a retracement back into this area right here to go long. Equal highs in here. That's what I'm looking for on those guys. Bro, bank did not get anywhere near where I was expecting it to go. Unless we're just coming back up into that order block for a hell of a dive down. Who knows? Took out the low. Returned to the perfectly to the top of these old highs here. Run through. It's just running up so fast now. They may have missed the lows. Still finding support at that level. Swing. Body trades above it here, going higher. Let me watch this one now. Doesn't take out a high. You don't want to see this trade a body below here now. So watch that. Get out of there now. You want to see it just start. Give me some reaction off of that. I guess you can come down. We've already come down to the. Oh, right there, 602. You want to see it just snap out of here. watch how this is acting, because this is important to understand what you want to see and how quickly you want to see it react. You'll often hear Michael say, now I want to see a big bold candle. I want to see this just get some legs out of here now, right? Because he's looking at this and he's saying this has done its thing. It's filled the fair value gap here. If it's got intentions, it's got to get up and it's got to go through this candle's mean threshold. It's got to start ripping through that. If it keeps on lingering like this down here, it just keeps tapping, not a good sign. You want to see it snap out of here and get the hell through this candle. So you want to see a big bold candle start growing here. Where's my carrot? My motivation. Yeah, you don't want to see this just wick up and wick down. You want to see this just start pushing through here. So you're kind of stuck inside this fair value gap now, inside this range, and you're really stuck between this candle and this candle, inside that little range. You're banging around off of that. So you're already up through the mean threshold of this one. So you want to come back down and tap on this. See how this one, if you're looking at the order block above and the order block below, this one is the breaker because it's the last up close candle before running below these lows here. And it's being hammered at multiple times here. The mean threshold is being drilled through. And this little old basic order block is just holding price. So there's more upward pressure than there is downward pressure when you're looking at these two candles. I look at them, I evaluate them, and I say, this one should just go crap, bam, and just go driving straight down. But it's not. It's getting worked hard, like it's getting drilled on before it gets busted through. And these lower order candles become higher order candles the moment we break the highs. If this does provide a level of support at the mean threshold, and this finally does give up the ghost to the downside, it's usually a better sign. It's not a breaker, it's a mitigation block because it has not broken an old high. I think that's going to be it for me because market's not doing a hell of a lot right now. So I think I'm going to go get something to eat. And then I'm going to go to my appointment this afternoon. And with that, I will see you guys tomorrow. Let's hope we get some, I'm looking for a retracement back into this inversion tomorrow. If we close above here. So I want to see this close above, come back inside here tomorrow. Wednesday, give us a nice little low into here, and then Thursday reverse and just start gunning her for the roof. If we do get a Wednesday high and then Thursday reverses back into here, I'm all right with that too. I just like this area right here as my swing trade. That's what I'm looking for tomorrow. And with that, I'm out of here, folks. Thank you for tuning in. It's been fun, and it's been a great week. Coming back, it's going to be a really good week. Keep your eyes on the prize. Keep your powder dry. Wait for your best setup. Russell, don't rush it. Just wait. You might get something in the macro this afternoon. If not, then wait for tomorrow. Our setup's there. It's waiting for us. This is a lot of chop right now. Sit on the sidelines. Wait for your optimum entry, and we'll catch it sometime this week. So till tomorrow, my friends, I will see you guys bright and early tomorrow morning. So thanks again for tuning in, and I will see you tomorrow. Go out, have a walk, have a stretch, Take it easy, people. You're not going to miss anything huge. Just wait for your setup tomorrow.